Okay, so what's an illegal dividend? Very important question for many company directors, given the fact that so many SMEs draw money out of the company by way of a combination of dividends and salary. Some people just simply draw dividend. Anyway, illegal dividend. Now, the word illegal, perhaps we could replace it with the word unlawful. Got nothing to do with criminal proceedings. Okay, it is simply a case that if you are going to draw a dividend is not remuneration or salary. It is not the same thing. Now, a lot of people say, oh, this was just my salary. I'm sorry to have to tell you that a dividend is a fundamental point in terms of in-company law, in the sense that you cannot take dividends out of a company or declare dividends. You have to declare them before you pay them. You cannot take dividends out of a company if the company is insolvent. Okay? Now, what that basically means is that you have to have sufficient distributable profits in order to declare a dividend for payment. Now, the consequences, if you do not have those distributable reserves, is that if the company then goes into liquidation, you're going to have to repay it. Even if the company doesn't go into liquidation, it's not dependent. You've got to bear in mind that there are plenty of insolvent companies out there that don't actually go into liquidation because they recover in some way. And the simple fact of the matter is or they change ownership. And the simple fact of the matter is that the shareholders of a company, if they change, for example, the company gets sold or whatever, the new directors can demand that dividends which were unlawful get repaid from the previous owners, for instance. So it's not completely dependent upon liquidation, even though that insolvent liquidation will be the most common situation in which shareholders and directors have to repay dividends that have gone to the shareholders, and the directors could be essentially culpable if they've authorised dividends to shareholders. Very often the shareholders and the directors are the same person. But the key thing to remember about an illegal dividend is why it's got to be treated very, very carefully, is that you cannot draw dividends from a company unless the company has sufficient distributable profits, otherwise known as sufficient distributable reserves, in order to declare that dividend. You can take money out of the company by way of salary or some other mechanism, conceivably, salary being the most obvious one. Don't want to get into this particular video into the whole question of overdrawn directors' loans and all this kind of stuff. But so the main alternative will be salary for legitimate taking money out. But if you're looking from a tax point of view and efficiency point of view to take it by way of dividends, make absolutely crystal clear sure that the company has sufficient distributable reserves in its most recent relevant accounts. It's not just simply a case of having money in the bank. Money in the bank is completely insufficient to the whole question of an illegal dividend, okay, because you might have other liabilities and so on. If you look at your company's balance sheet, for instance, your company's balance sheet doesn't consist entirely of a bank balance. You're going to have creditors, you're going to have assets, and so on. So that's why it is not simply, I've got this money in the bank, I can take that by way of dividends. If you've got a VAT bill in 28 days' time, you have to take that into account. There are all these things why relevant accounts are important when you're declaring a dividend, and that's what distributable profits is all about. Questions, queries, concerns, give us a shout. Winner Insolvency Inside Out.